Number 1, you can only offer owner financing if you own your home or your property outright. So in other words, if you have a mortgage on the property, this isn't going to work for you because you're not going to be getting a full payment upfront when you sell your property, just a deposit. And your lender would want to get paid back in full when you sell the property. So if you don't own it outright, you won't be able to offer owner financing. Number 2, a lot of times when you're offering owner financing, you're going to be working with buyers who otherwise wouldn't qualify for a mortgage in a conventional manner. And that isn't necessarily a bad thing. For example, you can have a self-employed person who doesn't have enough years of tax returns to be able to qualify for a regular loan. Or you may have somebody who doesn't quite have the credit score needed, but has plenty of cash that they can put down to qualify for the owner financing. Number 3, when you're offering owner financing, typically you're going to be able to charge a higher interest rate than banks are. So right now, for example, the banks might be at 5%. You might charge 8 or 9% depending on what you agree upon with your buyer. You're also going to get usually 25 to 35% in a down payment. So it's not like you're closing with nothing. The buyer's going to have some skin in the game, and you're going to be receiving that extra money every month. That's going to add up quite a bit. Number 4, if you're thinking you have to hold a 30-year mortgage and you don't want to be tied to this property for 30 years, forget about that. A lot of times the way you structure your financing with your borrower is you'll take a down payment and then you'll take typically like a 15-year mortgage, but you'll stretch that out over 3. And at the end of those 3 years, the balance is due. So at that point in time, your buyer is going to have to refinance, get all the money, and pay the balance to you. Number 5. Owner financing can offer you as a seller significant tax breaks. Because you're not realizing a huge capital gain all at once when you sell the property, but it's an installment plan over a number of years, you'll only pay on those installments as you receive the money. So rather than having a huge tax burden in 1 year, it'll be spread out. Number 6, not of small importance, is that you are now the lender. And that means that certain functions that a lender would normally take care of in a closing are now falling on your shoulders. And that means things like taking care of writing the note. Now, sometimes the title company will take care of that for you. This means that you're going to be negotiating the interest rate with your buyer. This means that you're going to be negotiating the other terms of your financing with your buyer. And also, you're going to have to make sure of certain details that the lender normally takes care of, like, does your buyer have homeowner's insurance? These are all things that now the lender would have taken care of, but there is no lender because it's you. So you need to make sure you have a good team around you to help you. Number 7, you may have questions like, well, why would I want to do this? What if the buyer trashes the house? Well, at this point, there isn't really much reason for the buyer to trash the house. This isn't a rental scenario. You don't own it anymore. They do. And so if you have a significant deposit, the only thing you need to really worry about is if they're making their payments on time. And if not, then foreclosure is always an option. Then you get the property back and you can start the process all over again. Finally, point number 8, you're going to make a lot more money doing this. So let's say, to keep it simple, you're selling a home that costs $200,000 and your buyer puts down 30%. So you're going to be financing $140,000. And you agree upon an 8% interest rate. Your amortization schedule is over 15 years and you want a balloon payment after 3 years. You're going to actually be making $230,000 at the end of it rather than just $200,000. So that's an extra $30,000 over the course of 3 years that you will have earned because you did owner financing.